Okay, perfect. All right, everybody, good morning, good evening, everybody. Welcome to this small discussion on crypto, open discussion we've kept. My name is Ankit Garg. I'm just organizing this, just facilitating it with a couple of other people who have interacted through Twitter or through trading community. I work from my algorithmic perspective. I run a small website called Decibel Capital. db.capital is the website. We have some trading systems that we share and trade on, and then there is some education and trading seminars and videos that we also host. So if you're ever interested, you can go to the website and get in contact with us through YouTube, Telegram, or Twitter. The topic for today's discussion is crypto space. We'll talk about what brought us here to discuss this in a minute. But before that, let me introduce the panelists. Before actually, let's go through some of the rules before that. So the idea is that everybody here is trying to learn, or nobody is an expert here. So this is an open discussion. If you have any questions, if you have any thoughts, feel free to jump in. Probably just message on the group or message on the chat first, so that we know you have a question coming up. So you might have a counter opinion to somebody else speaking, or you might be able to share some thought of yours. So please, feel free to do that. And just like anything else, this is not a financial advice. We are, discussing and sharing our thoughts on this space. And last, but not the least, you should know trading in any derivative instrument or leverage instrument is full of risk. Crypto is no different. You may not only lose the initial capital, but maybe on margin hold for beyond. So if you ever trade any of these markets or any of the other instruments, just be very careful with your money management. So just small rules. We'll keep it open. Bring in your questions, thoughts. It may happen that I may say something which is technically incorrect or conceptually incorrect. Feel free to correct me and speak up. Otherwise, if you're not speaking, please mute yourself. It'll be easy for everybody else to hear. Okay. So today we have myself. I just showed you my website and introduced myself. We also have Vivek with us. Vivek is also a trader. He's based in India. Usually trades Nifty and Indian markets, but also dabbles in crypto space. He's been the longest proponent on Twitter in my feed in Indian space, who I've seen supporting crypto and having a lot of discussions and thoughts around various features of it. So he'll be a good addition to maybe answer some of the questions. We also have Shakti with us. He's also an algorithmic trader in India. He has automated systems in Indian market space, but at the same time, he recently started an algo for managing crypto trading. So I'm sure a lot of trading related questions, Shakti will be a good candidate to answer those questions for you. And I'm sure share experience. And Vihan, I think he's running late, but if he joins, he runs Black Rose Technologies. So he's the guy, I usually reach out to when it comes to talking about technologies and understanding, the Bitcoin space or crypto space is very tech driven, unlike, finance, or it's not really pure financial instrument. So, it'd be good to have him if he can make it in today's call, but we'll see. So with that said, I just want to take 5 minutes to quickly arrive at the point wherein we decided, or I just thought, let me introduce, or let me just host this discussion. And this was last week based on some moves. So I just put in some slides and just wanted to give a quick run up, quick catch up for everybody. So this was my tweet from December 7th. How I saw Bitcoin back then was Bitcoin was rising to $20,000, which was the previous peak from 2017, 2018. And this time around, when Bitcoin was reaching 20,000, nobody was talking about it. So that kind of made me think that the fact that nobody's talking about Bitcoin 20,000 this is designated to go a little higher, maybe not higher. So this was just my thought I shared. I actually entered after it broke the high on the 1st January. I actually entered practically at the all-time high. This is what I tweeted back then. Bitcoin was reaching 30,000, so it was above $10,000 above the previous high. I actually put some accumulation, very small amount, $500 or so, in it back then. Um, these were some of the thoughts people were talking about. Indian markets, Indian government regulators banning it, Chinese government banning it. China has been a lot involved with Bitcoin when it comes to government. We might talk about it when we discuss some of the open ideas. uh, and I also thought, these are just my thoughts, when Turkey saw a spike of Turkish lira was crashing down, people were looking a way to escape the falling regimes, and they kind of used Bitcoin to transfer their wealth. So it's a medium of exchange as well. And I think last weekend only I tweeted this, when Bitcoin crashed. There were a lot of tweets I got, and it's always the case. I always get these tweets when Bitcoin crashes. Oh, how's your portfolio doing? And look what's going on. So I just tweeted this history, and I think this is the first discussion point I want to start with. Um, so I put some charts here. This is the 2013 chart. So Bitcoin was, early 2013 was up below $100. It was, I think, for a long period of time, $60, $70, before it made the run all the way to $1,100 or something. And then it dropped, 87% from that to 154. So even this drop, a lot of people, this drop was usually caused by, there was a lot of interest from Chinese um, um, wealthy people who were buying this to transfer wealth, just like we saw with Turkish lira. So and at this top, around this time, Chinese government came in and said, okay, they're not very comfortable with Bitcoin, and said we are going to put regulations in it and whatnot. And in response to that, this everything got crashed. Bitcoin crashed to this for next 12 months or so. It went down all the way to $152. And then back then, people who were looking to buy it, they used to feel $200 to $300 for a Bitcoin is very expensive. Nobody wanted to buy it because they had seen $150 on their charts, or $150 as the crash. Uh, this kind of phenomenon repeated. So this was 2017, 2018. So over the next 2 years, Bitcoin remained in a very low range, and then it jumped all the way to $19,000. So if you see the previous drop in front of this whole meteoric rise, was really a blip. And then the market went all the way up to 19,666. And 250 or $300 of Bitcoin price seemed a very nice purchase when it market. Hindsight bias for sure, but then I'm just trying to recall what happened. And then after this, Bitcoin crashed again from December to 2017 to the most recent bottom of about $3,000. Again, 84% drop before running it up again, the 20x now. So $3,000, if anybody bought at $10,000 during the recent up move, was sitting on losses, and then they were able to recover, or at least are in, more profits right now. So the idea, the thought behind all of this, explaining this, is that Bitcoin comes with a lot of volatility. At least traditionally has come up with a lot of volatility, and that's what scares people. But at the same time, when something is going 100 times or 20 times or 2000 times in its up moves, the volatility is expected to be there. Having said that, I think maybe Vivek can pitch in there. I think the next up moves are not going to be this huge, the 129 times and 30 times and 50 times. The Bitcoin as a market has been evolving. um, so I think the next move we probably have Vivek pitch in will not be the same. So this was the motivation. I just tweeted this, let's have some discussions. I asked some questions, and I had people coming up with the questions on my Twitter feed, and wherever they submitted a question, so I've aggregated them And these are just questions. If you have any other question, please maybe we can ask and discuss. So, this is the first set of questions, Vivek. I mean, what problem does Bitcoin solve? Vivek, do you have any thoughts on that, or anybody else?
Yes. So, Ankit, what problem does Bitcoin solve? In my opinion, there's something called hard money, which is basically traditionally been the role has been played by gold. What hard money means is that you can only create a limited amount of it every year versus what is already out there. So with gold, only 2 or 3% of the entire gold, which is above ground, is mined every year. So it's a sort of a low supply good, and therefore it makes good hard money. And that's the reason why it's been money for most of human history, till up to about even as late as 1970, gold was the primary form of money. But gold has its own challenges. It's very hard to sort of store and transport. It needs to be physically verified and stored in one like centralized location. So which tends to make it less distributed, less autonomous, more centralized, more prone to manipulation, etc., etc. So Bitcoin also differs from gold in one other area, is that if gold's price was to go up significantly, there would be a lot more interest in gold mining, and a lot more money would be put into gold mining, and a lot more gold supply would come about. And therefore, there's a self-limiting upside to the price of gold in that respect. Whereas in the Bitcoin protocol, what Satoshi did was that the mining difficulty sort of adjusts as the price goes up. So no matter what the price goes to, the supply of Bitcoin remains at a fixed constant. Currently, it's 6.5 Bitcoin every block, and every block is mined about approximately once in 10 minutes. So it's the only asset that we've ever had which is sort of inelastic to demand. So the supply doesn't increase as the price or the demand of the asset increases. And so you can say that Bitcoin technically is the hardest money we've ever produced, but that's not enough. You have to have the trust and faith in that money as well for it to become acceptable money, if for everyone. So what we are seeing is that Bitcoin goes through halving cycles every 4 years, where the mining reward per block decreases by a factor of 2. So it halves every 4 years. And the reason why we are all talking about crypto today is because Bitcoin had a halving last year in 2020. And what happens is that from 12 Bitcoin being mined every 10 minutes, only 6.5 Bitcoin are mined every 10 minutes now. So, the supply is reduced, demand remains the same, that starts to increase the price. As the price rises, more people get interested and start watching the space. And as the price rises, people build some sort of conviction in the asset, because this is an asset which is so early in its journey of adoption that people really need price confirmation to step in. So as the price rises, people believe that, okay, there is something there. People are sort of buying into this asset, and then sort of the adoption cycle takes forth. And what we're really seeing in this year has been and most of last year was a new adoption cycle, where a lot more new entrants come into the Bitcoin space. So there is a role for hard money in the world, because at some point debt levels of the government get so high that they need to debase their currency, and people have to move to some sort of hard currency in the interim, sort of, so they can move to either gold or Bitcoin and then come back to whatever currency that takes forth, or maybe not in this case, move permanently to a gold or Bitcoin sort of system. But so that's why it should have some value attached to it, but it should also be accepted by everybody as sort of a store of value for it to have value. So there are two essential things. One is the hardness, which means that only 21 million Bitcoin can ever be produced, mined. So the hardness is important, because in the history, if you read this book called The Bitcoin Standard by Saifuddin Ammous, he's making the case that in history, the hardest money has always taken the form of money. So hardest money means basically something that you cannot create more of out of will. And in the case of Bitcoin, not only is it hardest money, it is also decentralized, which means that no one entity determines the supply. It's pre-programmed. The supply is pre-programmed. It's also a bearer asset, which means you actually not physically, but you actually own the asset itself. Whereas most of the assets are kept in custody by a third party for you, including, like, if you're keeping, say, for example, gold in a vault, you have to trust somebody to keep it, or in a bank locker. The cash, your savings lying in the bank account, or your shares lying in a demat account or mutual fund, you have to always trust a third party to sort of store that money for you. So Bitcoin is the first system where it's completely trustless. You can store as much amount of money as you want in Bitcoin without having to need a third party to trust that either the supply schedule will change or the rules of the network will change. So these are the reasons why people sort of get attracted to Bitcoin. And
yeah, very good. I mean, pretty interesting points that Vivek has brought up. Just like to add a couple of things. So, when it comes to people asking what problem does Bitcoin solve? So, one is this aspect of being an alternate monetary system wherein the transfers to one part, peer-to-peer money transfer is trustless. You don't have to have an intermediary, and you can transfer your money. Like I can transfer Bitcoin from one spot in the world to another one without, within next 10 minutes, without having to go through banks or intermediaries, or fees is still there, but when you compare your wiring fees to Bitcoin fees, it's much less. The other aspect is it's a technology, it's a blockchain. It's based on blockchain technology. So one of the biggest invention of Bitcoin, not invention, is, I should say, more like implementation of an cryptographic space, is how Bitcoin is set up. So, if you're more interested in the technical details, there's a white paper on bitcoin.org which talks about how, what is mining. So mining is essentially solving a super hard mathematical problem. So the way Bitcoin is set up is that it has only 21 million solutions, and you can only find the solution. It's not like a mathematical formula which says a plus b is equal to c, and you can answer that. You can answer that question. You have to computationally put a lot of computing power to get up and speak, or not to to get the solution, and that is how a Bitcoin is mined. It's more details. I have somebody willing to ask a question. So let's see. If Chad Mex, I'm gonna unmute you. Why don't you ask your question?
Actually, I have a counter opinion. Can you hear me? Hello.
Yeah, sure. Please go ahead.
Yeah, actually, I have a counter opinion. So, as Bitcoin maximalist or crypto guys say that Bitcoin would be a currency, or it could be a currency, but I have a different opinion. See,
I'm sorry. I think I mistakenly, Chad Mex, if you can.
yeah, can you hear me?
Sorry. Yeah. Please go ahead.
Yeah, let's say you have 10 Bitcoins right now. Okay. And as we know, the world runs on credit. Like, if there is no credit, there wouldn't be a progress, because every new startup wants a funding or, loans, right? Like, do you agree with that?
Yeah. Go ahead.
Like, I want your opinion. Like, do you agree with that? Or do you think every business needs a loan, as a leverage kind of thing?
I mean, if you're looking for leverage, we are not really talking about how the businesses are to be run, or they should be cash surplus, or they should provide.
No, I'm not. No,
credit.
that's not the concern. What I mean is the economy runs on credit. Okay, like in my opinion, that's my view.
Mm-hmm.
You can have a different opinion, but every business needs a.
Chad,
Yeah.
when we were on a gold standard, economy is just running on credit. So the credit system was built on top of gold. So everyone was, sort of issuing their own currency. So currencies were backed by gold, which did not mean that you could not have debt or credit. So credit is important in certain amount of debt is good for economies. So
Yeah, right. So
this
yes, but yeah, but I have further to say. So let's say you stake your Bitcoin on, let's say, Yearn Finance. I hope you I hope you are aware about that. So let's say you stake a Bitcoin. So why would you take a default risk for just for 4% interest? When your crypto is rising by almost say 50 to 60%.
Yeah, so I wouldn't. So staking is something else which happens on a proof of stake network like Ethereum. On Bitcoin, there is no staking. What you're doing actually is lending.
Yeah.
When you lend out your Bitcoin, that Bitcoin is used by
Other people.
Setups which use that Bitcoin as collateral to run like derivative strategies on Bitcoin, like cash and carry strategies. And they are earning somewhere around 10 to 20% on the Bitcoin that you're lending to them.
Okay.
And out of which they're paying you about 5%. To some extent, people are comfortable lending out their Bitcoin. Now they are trying to find solutions where you can lend out your Bitcoin without giving up your keys. So that might be interesting, but personally, I would not lend it out for 4-5%.
Yeah, exactly. That's the point. No one would lend out their Bitcoins for 4 to 5%, but people lend their fiat currencies because they depreciate. So, they use it as a hedge against inflation. So there's a crypto.
But the thing, Chad, is that once the bank sort of like, if you trust the bank, and if sort of banks offer this Bitcoin lending in the future, you would be inclined to do it because it's basically a factor of trust. So if one of the large banks in India, for example, says that you can deposit your Bitcoin with us and we will give you interest on it, then you might do it. Because why would you not get the extra 4-5%? If there's, because already today you take risk with the banks with your fiat currency also.
And I'd like to add something here. So, Chad, what you're talking about is probably the terminal state, right? We are in this space right now, which is developing for last 10 years, right?
Yeah.
If you ask anybody if Bitcoin is money today, no, it is not. It is an alternative asset class, at best a technology. And it's not replaced. And I personally don't think it will replace fiat completely. It will be an alternate mode of payment, an alternate mode of store of value.
Yeah.
So, so when somebody says that, oh, it cannot be lent, or people are not lending it right now because of the high volatility driven returns, right? If you are getting, like to Vivek's point, if you're getting 50-60% return just lending it, why would I lend it? But when, let's say in 5-10 years or whatever the time period might be, if it evolves to a place wherein it becomes more stable, the volatility goes down, and then you can earn that extra float on yield on holdings, then people might start doing that. So it's it's an evolution in process. And comparing the terminal state of the Bitcoin, or at least expected terminal state, with the current situation is not the right apples and apples comparison, right?
Yeah, I agree with that. I am in crypto scene from 2017, so it's not like I'm against Bitcoin. So I'm holding Bitcoin since like 2017. So don't get me wrong.
No. Because it's like this discussion will be on internet and people will have these thoughts. So that's why it's nothing personal against anybody on this, right?
So there is another crypto called Monero. I don't know if you have heard that, but it has a like system. It has a protocol which has a 4% inflation. Like the 4% supply increases every like 4 to 6 years. Like Bitcoin has happening, so Monero has 4 to 6% increase in supply. So I think it could be a replacement for fiat.
But we'll discuss some of the altcoins a little later. I just want to have some of the other questions answered before
Sure.
we move to altcoins. So thanks,
Sure.
chat, for this discussion for now.
Yeah.
We'll continue with us. Thank you.
Yeah.
As I was saying, Bitcoin, it seems to Vivek's point, one of the examples I give when somebody asks me why should Bitcoin be of worth any worth, and I ask them, why should gold be of any worth? Why is that $1,900 an ounce or 10 ounces, right? It's quoted in the market and it's already been going up. And the answer, because the industrial consumption of gold is only 3% of the total mining that happens, or production of gold that happens in a year. So I'm not even trying to compare Bitcoin with gold. I'm just trying to draw a parallel here, to drive a point that gold drives its value from, on the basis of the perception that it's a store of value, right? It's the perception that we as Indians, our parents have always bought jewelry and gold as a, inflation hedge. So it's the perception which drives the value of gold, and it's the perception which drives the value of Bitcoin. And conceptually, they are two completely different asset classes, like Vivek already pointed out earlier. But it's, in my opinion, what drives the value is the perception. If tomorrow everybody starts thinking that this is dirt, then it will be dirt. And it's the same thing with gold. Why would, if if tomorrow morning you wake up and you realize, okay, my every gold is just like a piece of paper on me and nothing value, you will sell it. uh, Inherently it doesn't have any other value. Central banks are holding gold because of that perception of it having a store of value. And Bitcoin being a new technology, I see it as a technology based on blockchain. And of course, there's so many applications on blockchains and altcoins which are coming up, which we'll probably discuss in few minutes. And that's why I think, it has its own value, the perception value. So I think we have discussed all the points except this how or why institutional interest in crypto. So just some thoughts here. I've been involved with Bitcoin, at least known about Bitcoin since 10 years or so, 2012 or so. And back then, I used to have these in New York, these meetups in which I used to go to for Bitcoin, and institutions would laugh off, what is this, and why is everybody and anybody doing it? But since then, I've seen more and more institutions getting interested in it. They have started hedge funds, they have started ETFs or wealth management services. So the institutional interest is only going up more and more. And now with in the last 2020 and 2021, we saw Elon Musk popularizing the Bitcoin and crypto and Dogecoin and whatnot. So institutional interest is already going up. And earlier it used to be, the reason used to be that it's an alternative asset class. It has its own return parameters. It has its own volatility. Now institutions are also funding the applications or altcoins which are coming up on the chain, in the space. So the institutional interest is not only in buying and holding Bitcoins or crypto, it's also funding and supporting some of the applications and some of the protocols or coins. There's a distinction in a couple of those things, without going much into details. So institutional money is also supporting that. So institutional money is involved in this crypto space directly and indirectly in a couple of ways. Uh, One of the questions I received was, if who's holding most of the Bitcoins, and is it the institutions who are holding? And no, I don't think institutions are holding it. So to Vivek's earlier point that right now in 10 minutes only 6 Bitcoins can be mined. In 2012, they were 25, or I think 50 Bitcoins could be mined in 10 minutes. Back then, the price when I was introduced to Bitcoin was $7. I never bought it at that point. Otherwise, I wouldn't be having this discussion. I would have been sitting on an island. Uh, but so the the most holders of Bitcoins are those early adopters who mined Bitcoin in the early stages, through their personal machines and through graphic cards. So if you ever want to read up on that, read up of what's a graphical processing unit, GPU, which is, which gives you some more computing power, other than your CPU. And people used to install 4, 5, 10 of them, as many as possible in their machine's capacity to mine Bitcoins. So a lot of Bitcoins are being held by people who were early adopters and not institutions. Institutions have come into the space fairly late, right? Imagine when it was $1, $2, $10, $11 with no future, the institutions were not mining it. So if somebody has sold some of that, yeah, and some institutions have acquired it, but it's really, a lot of people are holding Bitcoins in different wallets and whatnot. With that said, I'll move on to next category of questions which I received, and I think I'm gonna speak only a few minutes here because this is all technicality and just to introduce people, and I think people would want to talk a lot more about trading it. So we'll go to that after this. So Bitcoin storage is this in a wallet. So Bitcoin is not a physical entity. It's like a crypto. It's like a code, right? So the way it is stored is you have a wallet which is like a digital space which can be logged and unlocked through keys. So there's a public key and there's a private key associated with each wallet. So you can host this wallet on a web server or through these websites in which you can, basically the idea is that your unlocked private key is the key to understand or know how many coins do you have right on. And a wallet has a private and a public key. So you give your public key to anybody who wants to send you Bitcoin, and you hold your private key to yourself. And it's all in blockchain, so it's all in ledger, it's public knowledge. It's all in the crypto. The hash codes are all public knowledge, as in not how to break those codes, but anybody can verify that X sent these many Bitcoins to Y at this point. It's all public ledger. So it's stored, digitally. It's not like a physical storage. But when people talk about cold and hot storage, the distinction I want to make is you can store these, think of these public and private keys as two keys to open a locker, right? So one key is available for everybody to open and view it, and the other is the read and write key, right? So you hold the read and write key on a web server, which is your, the private key. Or you can store that, you can generate a key and store it on a piece of paper or on, offline, which is not connected to internet. So when you're storing your private keys on a web server, that's a hot wallet. And when you're storing your private keys offline, which is not connected to internet, nobody can unlock those Bitcoins which are locked through this private key, then you are basically using a cold wallet. And a lot of exchanges, if you ever read up on Mount Gox, MT Gox, they were an exchange and they got hacked because all of their Bitcoins were stored in hot wallets, and then the hackers were able to steal these private keys and then take the money out. But nowadays, exchanges are working on these fractional reserve models wherein they keep only 10% of Bitcoins in hot wallets, and then 80, 90 or whatever the percentage might be in cold wallets to protect them being stolen. So even if they get hacked, they will only lose 10, 20% of their Bitcoins and not come crashing down. And they can make up, they have insurances and whatnot. So that's really the difference between hot and cold wallets. Cold wallets can be hardware wallets as well. So essentially what it will do is it will store your Bitcoin private key instead of in a piece of paper that you can print out and get, it may get on, you can store it on like a USB drive. So, that's really the hardware wallet. One of the other discussion points in the recent time have been the transactions and energy consumption. You're using electricity. It's a lot of hot topic. But I mean, Vivek or Shakti, if you are here, or I don't know if Vihan has joined, if you guys are here, feel free to pitch in uh, that, the transaction energy this is using, yes, it's high when you see it in absolute sense. But when you compare it to a lot of other applications and a lot of other usage of electricity, it's not like it's going to bring down the consumption and usage. And there's a lot of efficiency protocols being built as well. Vivek, Shakti, Vihan, any thoughts?
So from what I read, so I think Fidelity did a report on this issue, and they found that most of Bitcoin mining is done using renewable energy. Something like 60-70% of Bitcoin mining is done using renewable energy because it's sort of energy that is not being used and is cheaper, more profitable for mining. And what's now happening, very interestingly, is that people are using mobile sort of WAN units. So they put like a mining rig in a mobile WAN unit and take it to faraway places where there are like sort of discarded sources of energy. So from a plant where sort of there is like unused energy that is being just sort of going to waste, or from any sort of renewable source of energy in one sort of corner of the planet, for example, like a waterfall which is not being harvested for energy. And now you can actually use energy from those sources to monetize it, because you can basically build a generator, money generator from any energy source in the world using, Bitcoin mining, by taking the mining rig to that location. So that's also very interesting, because it's now allowing all these untapped sources of energy to get monetized. So there's a flip side to that energy debate as well.
Yeah.
So of course it uses a lot of energy at the moment, but most of it seems to be renewable, so it seems to be okay. Also, the argument made by Bitcoiners is that if you need a network which is so secure and so strong to sort of store the world's savings and be a true store of value, then you necessarily need that network to be so secure that it's sort of impenetrable, right? So and that seems to be only possible by like these proof of work sort of systems which Bitcoin uses. So it seems like that if Bitcoin does serve a big purpose and value in this world, then the energy utilization would be worth it.
Yeah, so that's a good point, that if you're trying to build a really a trustless system, there will be costs involved, and then that's what it is. It might be. And then the fact that, if when it comes to Bitcoin mining, if you look at the rigs that were set up by individual people, and not like now they are big organizations, they have become big. But when it was set up, you could actually set up a Bitcoin mining operation on your own personal computer. So the contribution, and a lot of initial days, 2012 and 14 up to 14, the initial Bitcoin mining hotspots were countries which were very cold. So you would use that to kind of offset and cool down your computer to to make it last longer. And that doesn't say that it doesn't use energy, but the idea I'm trying to say, to Vivek's point, is it's very decentralized. So it's not like you can only use the energy source from XYZ areas. You can actually, now they are mobile mining rigs, you can actually plug it to renewable source and just use that energy to mine Bitcoin as well. So that's how the innovation and invention comes in. And it takes time, the adaptation will take time, but it will get, it may or may not get somewhere. Another question that I have faced is the number of transactions being capped. So because of the block mining time and whatnot. So I'd like to address that heads on first, and then have it anybody else can pitch in. So it's correct that Bitcoin mining transactions are capped in one fashion, but the good part is um, there's a lot of off-chain activity. So a lot of new altcoins and distributed apps which are coming up are kind of trying to solve this problem. So imagine if your blockchain is the main highway, and then instead of posting each and every transaction on it, there are off-chain transactions which can settle in some peer-to-peer networks. And rather than writing each and every smaller transaction on the main blockchain, you are only writing one transaction. So people are utilizing Bitcoin blockchain in a lot of other ways, and Ethereum is where it comes in. Ethereum is another protocol which kind of enables a lot of such decentralized applications being built. And also on the Bitcoin network itself, there have been talks of, if they want to have an off-chain activity being posted on Ledger. So it brings me to the same point again and again. It's an evolving setup. It's not like everything is figured out. Yes, it has problems. It has found some solutions. It will find solutions. If not, the interest in alternate cryptographic currencies is coming up as well, right?
So Ankit, a slight difference of opinion here. So I don't think this is a problem per se. So what's happened with Bitcoin is, there's something called a layer 2 solution called the Lightning Network, which is on top of Bitcoin and not on another blockchain. So with that, basically you can pay instantly with almost zero fee, any amount of money anywhere, and it just takes like milliseconds. So there is literally that problem of number of transactions has been solved. And what the the biggest use case of that is coming up, the company called Strike is doing, is that they're transferring money internationally. um, and you can compare this via a bank transfer, international wire transfer. So it basically takes money in your local currency, converts it into Bitcoin, sends the Bitcoin across to the other side, and then converts that Bitcoin into the local currency there, all within a matter of 1 or 2 seconds. And this is at no cost. It's almost zero cost. It's almost instant. So just compare that with the traditional system that we live with. And if you've ever done a wire transfer, and you probably have, there's so much paperwork. It takes like 24 hours or 48 hours for the money to get transferred after the paperwork and etc. So that, I think, is going to be one use case of Bitcoin that will go live actually pretty soon. And whether the regulatory framework is important, of course, every country may have their own thinking around that. But so as a transactional layer, and of course with Lightning, there's also something called the Bitcoin Beach in El Salvador, and basically the entire community there uses Bitcoin for transactions. But the real question is, would you want to use Bitcoin for transactions, or would you want to use it as a store of value? But if you were to use it as for transactions, that's not a problem anymore.
No, I was not, I mean, I was coming to Lightning Network as well, but then the off-chain activities are also kind of solving. It was the early solution was the off-chain activity. Now the Lightning Network, like Vivek said, is coming, almost there. So, the early solution was off-chain activity, and now the Lightning Network is coming up. So, who knows what will it evolve into in future to address some of these concerns. That was really the thought. Okay, before we move to the next set of questions, any thoughts anybody else wants to share on this, or any questions, please, you can do so. Otherwise, we'll move to the next set of category. Okay. So, these are a couple of, I think this is where some technologist, Vihan, you're on call, right? Yeah, I can see you. So these are some of the questions we got. What are altcoins, and what is Ethereum? I'd probably address the stable coins first. So stable coins, when Bitcoin in the early stages had so much volatility, there was a need of having a stable coin, as in which does not change in value. So just like US dollar, which they can use that as a reference point, and use it on the digital crypto space for transactions. Tether was one of the first one, US dollar Tether, and then USD coin now, which is backed by Coinbase, are some of those coins to own their merits and demerits. The idea is really that if we issue a million of these coins, they are backed by US dollar. So you are basically, the idea is that you're buying, instead of using US dollar from the dollar space, you're using dollar or any other currency to buy this stable coin, and then you can use that as your form of money to transact between exchange basically one currency to another. And this actually facilitated a lot of trading activity as well, because the exchanges and were able to build bigger limit books, and they were able to code these pairs in a more robust manner without having to settle their cash transactions. So it became that settling mechanism as such, one of the stable coins. And there have been, now you have many more stable coins as well, but then these are the bigger ones in there. Need for altcoins is, just like we've been discussing this, Bitcoin was a blockchain, then Ethereum came about, which is more of a protocol on which it's also cryptographic or blockchain based concept. But the difference being you can build applications, so it has its own solidity language in which you can code and build applications. And then essentially you can, anybody with knowledge of using Ethereum can build their own coins without having to maintain their own blockchain, or without coming up with their own protocol to settle in this peer-to-peer space or the trustless way. And that's what Ethereum enabled, very early in the stages. So Ethereum is not really, Ethereum and Bitcoin are pretty different. They are not serving the same purpose, though they are in the same space. So, I mean, I don't want to go into what Ethereum is and how the differences are. There is a lot of discussion on that on internet. You can read upon that. And I'm sure, if any of you want to pitch in, please do so. There's a question that if USD is 100% backed by US dollar, so Tether, they claim to be backed by US dollar for a lot of that amount, but there have been some challenges on the Tether itself. But if you look at USD coin, which is backed basically Coinbase, I think they hold their deposits in liquid US assets, US dollar assets. And then, one of the recent applications is Matic, which is now Polygon, which is allowing a lot of developers to build apps, distributed apps on top of. So it's another, it's another technology being built. Just like when e-commerce got popular, Shopify came about, Squarespace came about. The technology was still there, but they created these avenues for an end user to come in and build e-commerce websites. I'm not saying Matic is allowing you to do that, but I'm just trying to again draw a parallel that Matic, as an example, is building as an area wherein developers can come in and build distributed apps. So they're kind of providing a platform on Ethereum space, if I'm not wrong, for distributed apps to be built. And such as this is one use case, and there are so many other use cases that you read. It's important to read, if you're interested in any of the coins, it's important to try and read at least the white paper of what they're trying to do. And you would see, lot of, almost everything is very, technology driven. It's not, these coins, when a new coin comes in and only talks about inflation, or it talks about countering some of the monetary values, it more or less may or may not, be useful in the future. But if you look at a lot of altcoins which has some technology, tech use behind them, I think that's where the value lies. That's where the future, some of your future 100x coins might come in. The tech way know-how or tech background behind some of these altcoins. And I think that's where I'd like Vihan, if you don't mind speaking up. I'm sure you have some thoughts here, or if anybody else as well. I'm not sure Vihan is able to right now.
So Ankit, I have some thoughts.
Sure.
Yeah, so I think it's really fascinating what's going on with like things like DeFi, which is decentralized finance built on top of Ethereum, and what Polygon is doing to try and scale the Ethereum blockchain is also really interesting. So only two things here is that one, it's sort of unproven technology because Ethereum in its current state has only been maybe like live for a couple of months. They really go through a lot of changes in terms of what the underlying structure of the blockchain is, how it's secured using proof of work, then transition to proof of stake. So so it's sort of a little bit unproven, the underlying blockchain, because it's in flux. It's not very stable. Like Bitcoin has never changed, and it's been around for 12 years, so it's proven. So Ethereum is a bit unproven at the moment. But the applications that are being, and the other concern is really, does it scale? So at the moment, it doesn't scale very well because there's a constraint in how much bandwidth it can throughput, it can deliver. So that's why people like these people, three guys in India who are building Polygon are trying to build solutions to be able to scale the Ethereum blockchain, so it can truly be used for these decentralized apps and sort of decentralized apps could be the building blocks for Web 3.0, which now is sort of a new thing which people are talking about, which is the building blocks of Web 3.0, which is a decentralized internet where apps don't need to be stored in any central location or any server. They can just be deployed on the blockchain, and they can be scaled to as many users live without any issues and any server management or any sort of centralized point of failure. So that's another area which is yet to be proven, but very interesting to sort of watch and see what develops out of there. And decentralized finance, of course, which includes lending, borrowing, decentralized exchanges where you have exchanges where you can trade between different cryptocurrencies, and these are completely decentralized, not owned or operated by anybody. Prediction markets and stuff like that. So these are very like interesting technologies, but and then obviously, of course, NFTs, non-fungible tokens, which again are on the Ethereum blockchain smart contracts. So these are unproven but very, very interesting technologies. And to me, like having verified ownership of a digital asset makes more sense than having verified ownership of a physical asset. Because when it comes to physical assets, like if you have shared ownership of real estate, for example, which people now are talking about, shared ownership of, say, for investment purposes, tokenization of assets. That is not as obvious to me because you still need someone to sort of verify that the underlying asset exists, what make those decisions about the maintenance, etc., on those assets, and those can be very challenging to do in a collaborative and decentralized way. So, but for ownership of digital assets, these sort of technologies seem very intuitive to me.
Yeah. So, one thing that I always try and say is, when people say, oh, 1,000 altcoins got crashed in the last dump and next time they will be another 1,000. So I try and compare that to any small cap or any upcoming businesses or, startups that you think about. So, you only know about Facebook because it succeeded, but you don't know about many other social networking sites that, people try to start and then scale up. It's the same thing with altcoins as well. Of course, there's a bit of, scamming going there as well, because people always try and take advantages wherever possible. But apart from that, there will be new initiatives which will come up, and a lot of them will get fail, some of them will survive, and some of them will actually be grow and become something more robust and more stable. And that's why when I think of this space, I think from a technology perspective all the time. And Vivek already mentions, right, these decentralized apps without having the users on internet but on the blockchain. Like there's a lot of application of so many different protocols and tokens and technology which is coming up, and I think that's where the innovation is happening. People like to link only the crypto space to only Bitcoin, which is of course the pioneer. But the space is much wider and broader than the Bitcoin or the blockchain. And the fact that Bitcoin started, was the first and pioneer, it's still used as the leader, but then if you look at, even in terms of market capitalization, some of these upcoming technologies have been taking more and more share, because once you start getting deeper into the tech behind it, you start putting more money into it, or you might want to support it given what you think it's going to be. If somebody told you when Amazon was $1 that it will be a multi-billion-dollar company, you would have bought it, right? And then at the same time, there are many small businesses and startups that Amazon completely decimated. It's the same thing, when people talk about altcoins and their prices crashing and volatility. So think from a technology perspective, and not just, there'll be few bad apples, but then the space is bigger and beyond just few crashing coins and few scams. And even the scams, I shouldn't say have reduced, but then in the early days of Bitcoin, you would hear people running away with each other's money so often. Like the exchanges would do that. It has the controls have tightened around it. The organizations who are enabling these Bitcoin exchanges have gotten smarter and more robust around it. So the space is evolving. um, anybody anybody who would have any question, thoughts to share, I'm happy to listen to us. Okay. um, just interesting time, we are 1 hour, so couple of, I think, two more sections to go. So this is, I think, a lot of people might be interested in, what's the Bitcoin regulation space in India, and should it be regulated at all, and how can people trade in? So I would ask Shakti to pitch in wherever he thinks is useful. So India has, so people who may or may not know, I started my journey as an FX trader in India. So I've seen, the kind of capital controls or FX controls that RBI has Indians. And the prime reason is that India being, so there's something called partial convertibility and full convertibility. And India, INR is partially convertible. And the idea is to restrict the outflow of currency to, to not open the economy or not open the capital inflow and outflow very easily. They want to restrict and control it. And that's why India has always been, and most likely will for a longer time, will stay on a very cautious and conservative side when it comes to Bitcoin, at least allowing it officially, as far as allowing officially is concerned. But that doesn't stop any investments in technologies not being taken place. I think where India usually doesn't want don't want it to happen is they don't want uh, people to be able to circumvent capital controls, to be able to send the money and capital outside India without having some form of checks and balances in place. And that's where I think the catch 22 comes in, wherein they say that you can't, they try to, there's always this fud around banning crypto will be banned. But how can you ban a technology network? You can only ban at the at best, and at most you can ban a business from running it, running an exchange, but the technology or the network cannot be banned. So if uh, it could be used in a peer-to-peer network, you can't ban that. You can only officially ban a business from accepting Bitcoins and using it to exchange your currencies, but that will not change the underlying uh, technology behind it. And because somebody in chat is saying, just like you can't ban Linux because it's open source, yeah, practically it's the same kind of parallel. So this whole discussion around when India will ban it and will put people into jail under FEMA laws and whatnot, this comes, I mean, I'm not saying this is not possible and you can just throw caution to the wind, but at the same time, if you try and logically think about how could a government, and when I say how, I don't mean to challenge, Arey, kaise ho sakta hai? I'm just saying on a step-by-step basis, what do you think can happen, which can probably lead to such a situation? So if people probably search online, there was this in India, now the bigger exchanges are WazirX and whatnot. It used to be buy sell Bitcoin. So it was buy sell bitco.in 2012-14, which is the largest peer-to-peer exchange. And then when they banned it, they had raids on their offices. They closed down the business. But it's nobody. I mean, there's no law. There's nothing preventing anybody from running a network. And I still know there are a couple of startups which are based in India and which are dealing in Bitcoin related work. So it's not that things are not happening and things are not taken care of. And same goes with China, because they also try and control the capital outflow or inflow into the country, more the outflow rather than inflow. So they want to restrict it. But even China, a country like China, which has so much power in global space directly or indirectly, even there the Bitcoin is not banned. And every time the Bitcoin rises, you will see all these regulators coming on televisions and saying this is not good, this is not good, this is not good. But if nothing happens, like even a country like US has not banned it. Of course, US is more open to a lot of ideas, but there has never been a ban on Bitcoin. There used to be illegal activities, and if you want to read on that, read on Silk Route. It was a cartel run enabled through Bitcoin. And yes, that takes place. But then, like I said, the network and the system is slightly bigger and larger than uh, just few bad apples. Um, One of the questions I actually received, which is interesting, was should it be regulated? So, I think the you can't regulate the Bitcoin. What you can regulate is how you use the Bitcoin for money exchanges. So Bitcoin, like in US now, all the bigger exchanges like Coinbase and Binance US, they do the AML and KYC requirements. They don't allow you to trade on the platform until you have completed their AML and KYC. So once that is done, then if I'm trading through Coinbase, whatever I'm doing can be reported to IRS. And that's where a government can come in and say, okay, it's not completely black box, it's still white, but we are going to allow that as far as we know what you are doing. And that may happen a lot in Indian space as well. But the challenge usually comes as you can withdraw. So one of the examples could be they can limit the Bitcoin withdrawals from an exchange to a certain extent, because as long as you're trading on a platform, your coins or your digital assets are on the platform. The only way you can actually circumvent FEMA laws is when you withdraw them to your wallet, and then you can send those tokens to somebody else. And that's where some of the controls might come in, that they may restrict or they may allow, they may require some form of due diligence. I don't know, I'm just thinking out loud. So I guess what I'm trying to say here is that Bitcoin as such is not banned, will not be banned. Yes, there will be requirements, there should be requirements. Ever since this AML and KYC has come into US exchanges, there's, the illicit activity has definitely gone down. And the same could happen in a lot of other space. uh, and when it comes to trading and investing, I think, that's where we have Shakti online. Shakti, do you want to take that question for our listeners?
Yes, Ankit. Yeah, I think trading point of view, like same like how we trade zero, like we can trade cryptocurrency as well from India. Like so first thing we need to deposit fiat currency rate to trade with some amount. So Vasirex provides that a nice platform to deposit and withdraw INR. So once you do that, transfer the amount to Vasirex, we can trade all cryptocurrencies. Assume if you want to trade any automated platforms, like Binance provides that API, so you can transfer whatever the coins you have it from Vasirex to Binance. So both are, I think we can link Vasirex to Binance. So I think almost zero transaction fee to transfer funds from Vasirex to Binance. So Binance provides the API, and also we can do the algo trading through Binance as well. So
Yeah.
yeah,
So
apart from that, yeah, come again.
no, no, please go ahead, Shakti.
Yeah. So instead of so we have like currency point of view, we have spot currency and future currency. So same like what we have like stock and futures, right? So if you want to do any kind of like short term or like multiple days, like long term holdings, so you can buy currencies like Bitcoin or ETH or some other altcoins. You can buy it and hold it in spot wallet. And if you want to do kind of trading kind of thing, you can use the futures. So same like Nifty futures or Bank Nifty futures, we can buy the coin and we can trade on like future coins like as well. Like so Binance provides that future and options as well.
Yeah. So, to what Shakti said, so for to be able to trade, you probably need to fund your INR to buy a US dollar Tether or USD coin on Wazirex, and then you can use that to trade on Binance. Binance now owns Wazirex, so Wazirex was acquired by them. So that's going on. Shakti, I think people might be interested in some of the trading aspects of it. How we see there's a lot of volatility in the market. So I did get questions on if they want to trade on cryptocurrencies. One is getting facilitated, the operational aspect of it, and I think Shakti did participate with Kiru recently on a webinar, and I think it has a lot of visual details you can find. Otherwise, reach out to me. I'll share that YouTube video as well. But from an algorithmic perspective, what kind of systems, what kind of methods do you think are explorable if somebody wants to actively trade? So until now, we've been talking about investing in Bitcoin and altcoins and the larger use cases. But when it comes to, let's say, actively trading in algo, just like we have in Nifty, Bank Nifty, what form of trading could be done in the space?
I think crypto has like a lot of volatility, right? I mean, so we can do kind of good scalping. I mean, so people who are good at scalping in the stocks, they can do very well in crypto. I think, I mean, even I know some persons, they did very well in scalping. They are earning a lot of money. But depends on persons that skill set, right? Somebody will be interested in like a kind of like trend following algorithm, so they wait for some hours or some days to get the profit. And some, I mean, I think trend following also same like stocks. Like if you do the trend following on cryptocurrency, the stop loss point of view it should be void. So we can't keep like 1%, 2% stop loss in crypto. It will be hit. I mean, small change, small event itself. Like I mean, we need to have like a bigger stop loss, and obviously like to get that stop loss percentage and all, we need to backtest the data. So if you know the coding and all, like we can download the historical data which Binance provides. We can backtest the data. Like I mean, if you want to do the trend following, I'll go on like I mean. Like multiple days or I mean multiple hours. So I mean based on the time frame, you can backtest. You can find the appropriate stop loss. Then you need to deploy that actual money. If you, I mean, you can't without backtest. If you put the money with if you keep small stop loss, it will be hit immediately. Like I mean, volatility is very huge here, right? I mean, so those should be considered. I mean, we need to take care of it.
Yeah. So just like any other system, whenever you're trading in Indian market as well, money management is important, and so is in Bitcoin and in this crypto space, and primarily due to the fact that it's more volatile, right? So if it's more volatile, you need to be making sure that you don't get hit, and of course it provides a lot of leverage up to 125x Bitcoin Binance provides, but that doesn't mean you have to take it all. So in FX space this used to be the case, and now in a Bitcoin space this is the case. So it's a new space, and given the fact that there's a lot of volatility, a lot of trend following could be done. There are people used to do cross exchange arbitrage as well. So especially if you have US dollars facility. So because this is an OTC market, it's not exchange driven market. So there is no one price of Bitcoin. So your price of Bitcoin on one exchange might be different than the other one. So you can buy on one exchange and sell the other one on the other one, or you can do a cross exchange arbitrage, like a triangular arbitrage as well. It used to be possible. I think now it is dried up a bit. uh, One thing to if you ever look at some prices and you see one exchange is quoting a slightly higher price and constantly doing that, there might be some reasons to it. So some exchanges limit the amount of money you can withdraw from them, or the transactions are slightly slower, or there might be more counterparty risk. So if consistently an exchange is higher than the other, that is prime might be due to some other factors rather than market dislocation. But if you are looking into building an arbitrage kind of a strategy, you can build it up when there is market dislocation and not really a structural reason for an exchange to have a higher price. So I think Korean exchanges back in the day used to slightly have always higher prices, and that was due to the fact that from those exchanges you can only withdraw Korean wons, and then not everybody can do that. So there were some restrictions which allowed, which made uh, those prices a little higher. There's a question.
In my experience while trading, like trend following on Bitcoin, higher time frames usually work better. So like hourly to 4 hourly. So 4 hourly is very common in Bitcoin. Tends to work a little bit better. Also, like you have to sort of automate these algos because the market runs 24/7, so you can't really do manual or discretionary trading unless you're scalping in and out. And also for options, Deribit has liquidity and options. So and they have options going up till like March of next year, even beyond. So and there is now some decent liquidity in those options also. So that could also be an interesting way to sort of play Bitcoin.
Yeah, I agree. I mean, one of the system dynamic that we run on Nifty and Bank Nifty. So on Nifty, Bank Nifty, we run it on a 5-minute interval, so it's much more, rapidly changing positions. But on Bitcoin, we run it on a 90-minute interval, or at least 90-minute interval, and simply because it's a 24x7 market, and it has sometimes large jumps which can wipe you out. So depends on the system you might be looking to make. trend following would need lesser whipsaw, so you might want a slightly higher time frame. But scalping, like to Shakti's point earlier, you can do probably on a smaller time scale when, let's say during the New York times when it's more liquid, you can, like, short sprints, for lack of a better word, could be executed. So it depends what type of trading you're trying to do. And yes, the data for live and historical data from Binance is free. You just need an account from them. So they have an API that you can use to fetch whatever data they have historically. So this is one of the, if you're algorithmically driven, you can actually just set up an account on Binance and fetch all the historical data you want. Unlike in a lot of exchange driven markets wherein, like Nifty, Bank Nifty, if you want historical data, you either have to buy it from official data vendors, or, take it from somebody who already has it, and so on. I see Chad is Chad, do you have a question, or do you want to share something? If you have, please go ahead, unmute yourself and speak.
Yeah, I have a question. How much, I just want your opinion. I won't take it as a financial advice, so you can freely give your opinion. So how much capital do you think is required to, trade Bitcoin futures? Because let's say, you can even trade with $500, but it won't be meaningful as much as if you trade with higher capital. So what amount do you think is a good amount to start with?
So when it comes to good amount, and technically you can open an account with $100. There is no minimum amount for
Yeah, but it won't be meaningful, right?
Yeah.
Because when, like, if let's say if someone asks me like how much capital does he need to trade Nifty futures, I would say 10 lakh rupees, because it's a good amount to start with. Even your even your algo requires 10 lakh of capital, as
Yes.
far as I know.
Yeah.
So what is that amount for Bitcoin futures or Ethereum futures?
Yeah. So right. So okay, let me try and answer that, and keep and Shakti, please interrupt if I'm going off now. So let's talk about the contract specifications first. So the Bitcoin dollar contract, futures contract on Binance is $1 worth. So you can be as granular as you want to trade that. You can trade for 100, 200, 5,000, whatever the amount is. When it comes to what is meaningful, it depends on what you are doing. I mean, if you're trying to figure out how things work, I would say just only start with $100. Try and test out things. But let's say you have back tested something and you have paper traded for a, like, on demo account for a while, then put some money on it for $100, $200, and it's doing well and it's expected. Then you can scale it up to the, whatever capacity you have. Given the fact that you are able to position size. So I would say, I mean, $100 to $500 is a good starting point, without getting blown out. You take very small. The good point about Bitcoin transactions, like I said, you can buy $1 worth of Bitcoin at a time in an exchange. So you can technically buy, $10 out of your $500 and just keep the rest of it as your buffer. So, once you figure out if this is the kind of return profile I want, and this is the risk and reward, like my drawdowns are, if I use 100% of my margin, then my drawdown is 50%. But if I use only 50% of my margin, my drawdown will go to 25%. And that's how you control your capital outlay as well. So,
Right.
not like a simple and straightforward answer. And Shakti, Vivek, if you have any thoughts, please.
I think it depends on that person's net worth, right? So I won't put more than 1% of net worth on trading in cryptocurrency trading, especially for example, it depends on person's net worth. But when I started, I just put around $1,000, and I had a bit less risk initially when I started with backtesting. Then as I get the confidence level, we slowly increase the risk. That's
So, so Shakti, how much capital is deployed on Bitcoin on your algo?
So for my own money, I started around $1,000 on my own money.
Yeah, but if you would be comfortable, can you tell me what it's now? How much capital have you deployed on Bitcoin?
He scaled up
that's
the trading account from $1,000 to, I think, $18,000 or $19,000, right? He was actively traded on a high risk capacity and scaled it up, isn't it?
Yeah. That's what. So even that, so myself put around $1,000, and also three of my friends also shared $1,000. Totally, we put around $4,000 on 2 different accounts. We tried multiple risk level, multiple setup, and like one account like from $2,000 to it went up to $26,000. Then again now it's around $3,000 to $4,000. It's a big fraud. But some other account again it went to like $2,000 to $10,000. Again it came to $4,000. Then we withdraw the original capital what we put. So currently we are just running the profit. It's in fraud. Obviously we are trying multiple things, right? I mean, obviously like each person we didn't put $1,000, but we took the $1,000 already.
All right.
So it's kind of trial and error.
Just more like I just have a suggestion. As you were talking about, Feds coming knocking your door if you do not reveal about your crypto trading. So what you can do is like when you deposit crypto, you don't need a KYC for up to 2 to 3 Bitcoins, right? Hello.
Yeah. Go ahead.
Yeah. So if you deposit 2 to 3 Bitcoins on Binance, you won't need a KYC. So what you can do is buy P2P. Like if you have, there are websites like local cryptos or local Bitcoin. So you can buy crypto from within your region. Like let's say if I want to buy a crypto in Mumbai, so I would go onto that website and find sellers there.
Yeah.
So we transact through escrow, something called as escrow. The website acts as a escrow. So they take the how would I put it? So they take the crypto from the seller, and once the buyer transfers their money and the seller gives a confirmation, so crypto is released to the buyer's account.
Yeah. So localbitcoin.com was, one of the first peer-to-peer exchange website which came up and still there. And of course, there are various ways to avoid KYC if you try and find those out. But I was, local Bitcoins is used. Of course, it has a volume, but when you look at the entire space, more and more money is going to where regulations are there. So, when it thinks about institutional interest, an institutional interest will not be in a such a local Bitcoin kind of an environment. It will be where their money is regulated and money is backed, and at least there's some legal recourse for them. So there's, yes, definitely for a smaller amounts this is possible, or in the smaller scheme of things, but in a larger grand scheme of things, you can and you should probably stick to more regulated ways. And local Bitcoins is the only risk is the counterparty risk. If the person you're transacting with is acting dishonest, but that's with any other transactions.
Yeah, I agree with you on institutions sticking to the regulated environments. But I think it's good for retail investors or traders. And I think, as you said about counterparty risk, so there's an escrow, so there won't be any counterparty risk, if I'm not wrong.
Yeah, so escrow, I mean, you can still fool an escrow. So somebody, the seller's Bitcoins are logged and the buyer will say, okay, I made the payment without making the payment. So I've transacted on local Bitcoins and I've always been, there are always some bad apples, right? Because they will say, okay, I paid for it and they haven't really, so my Bitcoins are logged, and I can't sell it to anybody else and the price is changing. But then they will try to falsify. They will try to send a text saying, hey, can you send me that? And it's just of course there are ways. There are legitimate people as well, just like on eBay as well. If you ever used eBay to sell or buy something. So to peer-to-peer, escrow is like again becoming keeping a centralized party in place. So I'm not saying it is not possible. I'm saying it's definitely possible, but then it comes with its own set of risks, when it comes to
yeah, I agree with that.
Okay.
Thanks for answering my questions, Ankit and Shakti. It was very insightful.
No problem. I think we have just one more section, and I think we have already answered some of this. So I think to get data, you can actually go to Binance, open up an account, trade, get the API and get the data from it. When it comes to charts, tradingview.com has the charts that you can use to do your, test anything or see what's going on. Strategies to be possible to be traded, we've already discussed some of this, and trading fees and commissions are slightly different than, so all Binance at least allows you maker and checker fee. So the idea is that if you're taking a market order to the market, you're taking liquidity away, so they charge you a slightly higher commission. But if you put limit orders only to enter and exit, they kind of ask you to allow you to have a lower fee. So again, to my point earlier, if you're algorithmically driven, if you know what you're doing and you can build algos and you can optimize them, you can actually have very cheap trade, not very cheap, but like slightly cheaper than taking market orders. So that facility is there. I think it's 0.0. It can go depending on your volume. So they also allow, if your volume increases, they allow lower and lower fees. That's how they enable more liquidity in the market. But as a starting point, I think 0.1%, 0.1% round trip I used to take in my back test, given the fact that it's illiquid, slightly liquid or slightly more volatile, versus compared to Bank Nifty, in which I would usually take 0.03%, 3 basis points. In crypto, I will take 10 basis points. So something similar to slightly higher than Bank Nifty kind of commissions and slippages. But you can always see and check your own exchanges to see what kind of fees they have. Somebody's asking, Bhavesh is asking, when does the public and private key thing comes in? I bought Bitcoin over ZRX. Where is my key? So that's a good question, Bhavesh. So your wallet is owned by WazirX. So your private keys and public keys are both with WazirX. You don't have them. Basically, you have given the right of those things to Wazir to hold on your behalf. What you should research is how to set up my own Bitcoin wallet. You can do that as a very small software on your own machine. If that's the starting way. You can also generate public and private keys, but you have to be much more careful if you generate your own public and private keys from some of these websites, and then you can just store them at your own end. So right now, think about it that WazirX is the central party. They have their own wallet and they have their own distributed wallets as well. You have given them the right to store and hold your Bitcoin on your behalf. So you don't really have your own wallet right now. It's WazirX who have their own wallets with privates and public keys, and they are holding it on your behalf. When you ask to withdraw your Bitcoin from WazirX to any other wallet, that's where you will have your private and public key with you. So it could be another software which can have both of them, or like I said, there are ways to generate those keys. And like, if you look at cold wallets or hardware wallets, you might, some of these thoughts might become more clear. So until unless you withdraw from WazirX, you don't have Bitcoin in your own wallet. It's in WazirX's wallet. On that. Okay, I think we are. So we have Vihan coming in. Vihan, bro, what's up?
Sorry, bhai, I was on a call with someone.
That's okay. That's okay.
Batao, bro, what is happening now? Are we learning how to make daily profits?
Yeah, of course. Every second profit, dude. So Vihan, the good point, the reason I wanted you to be here was, technologically driven, I know you're very tech driven, right? And I know you've been researching a lot on these new altcoins and tech coins. So from tech perspective, what's your thought? What's going on?
Bro, मैं सच बताऊं, my understanding of the tech isn't, perfect. मतलब मुझे पूरा in out ऐसा नहीं पता. But what I do understand from the couple of projects that I follow या know about, one being the Matic Polygon जो अपना देसी वाला है, the other being Matic being the coin, the Polygon network being the project, and उनका पूरा क्या कहते हैं काम was कि भाई हम लोग आपके लिए प्रोजेक्ट स्केलेबल बना देंगे. They're like an L2 solution and or like one of the type of L2 solution. तो मैंने थोड़ा पढ़ा है, and there are different types also. There's something called like roll-ups, ZK roll-ups and zero knowledge roll-ups and और कोई optimistic roll-up. दो तीन ऐसी schemes है. The intention of all of them being कि ये जो अपने transaction speeds और speeds increase करना, cost decrease करना. तो एग्जैक्टली कैसे काम करते हैं मुझे भी नहीं पता, बट जैसे ऑप्टिमिस्टिक रोल अप इज कि भाई जब ब्लॉक अप्रूव हो रहा है उस टाइम पे ज्यादा चेक करने के बजाय आप मिनिमल चेक के थ्रू उसको बोल दो कि भाई ये ठीक है, एंड देन आप पोस्ट फैक्टो अगर कोई बोले कि यार इसमें कुछ दिक्कत है, that is when you you know look into that transaction deeper कि भाई was there really something wrong with this, if yes then you penalize जो भी fraud बाज लोग हैं, the network penalizes them, ऐसा कुछ है। तो अगेन मुझे पूरा नहीं पता, बट ये बहुत ही मुझे जितना समझ आ रहा है जो भी अभी तक हमारे इश्यूज थे बिटकॉइन के साथ एंड प्राइमरली कि भाई ये तो ट्रांजैक्शन के लिए यूज नहीं हो सकता, आई कांट बाय कॉफी विद इट, ऑल दिस नॉनसेंस, these guys are solving। तो hopefully down the line these projects will truly shine to, and अभी और भी नए नए आ रहे हैं, जैसे मैटिक तो आ चुका है, पॉलीगॉन आ चुका है, ये आर्बिटम करके एक आ रहा है, एक आई थिंक ऑप्टिमिज्म नाम है, ऑप्टिमिस्टिक नाम है, कुछ ऐसा है, वो आ रहा है। तो there's a lot of these guys creating these scalable solutions, scaling solutions on blockchain। Next is the class of these DeFi coins, and DeFi तो खुद में is a very massive space जितना मुझे समझ आया। There's synthetics, there's all these liquidity, decentralized exchanges, liquidity pools, पूरा DeFi flavor का what do you call fixed income या money markets, जहाँ पे आपको इन क्रिप्टो पे yields मिल रहे हैं, yield farming कर रहे हो, ये सारी nonsense है। तो what I know is there is a lot to know and I know very little, but I can very confidently say कि भाई if you're ignoring this right now तो आप मतलब जनरेशनल अपॉर्चुनिटी छोड़ रहे हो। मतलब जितना मुझे समझ आ रहा है जो अपना टेक्नोलॉजी एंड फाइनेंस के जो बिल्डिंग ब्लॉक्स थे, जो पूरा टेक एंड फाइनेंस इकोसिस्टम है, उसको एटलीस्ट डिसरप्ट हो रहा है कि नहीं आई डोंट नो, बट डिसरप्ट करने की कोशिश जरूर की जा रही है।
एग्जैक्टली।
तो इस कोशिश में अगर आप एटलीस्ट उसको फॉलो नहीं कर रहे हो एंड एटलीस्ट मतलब इफ यू आर नॉट कॉग्निजेंट ऑफ दिस देन यू आर मिसिंग आउट मेजर। एंड एग्जैक्टली ऐसा ही होगा कि इफ दिस वर्क्स आउट 10 years down the line you'll be like यार मेरी आंखों के सामने दुनिया बदल गई और मुझे पता भी नहीं चला। तो my suggestion to everyone would be कि भाई इसके बारे में देखो, पढ़ो जरूर, जो भी एटलीस्ट फंडामेंटल है टेक्नोलॉजी का, जो एटलीस्ट ब्लॉकचेन काम कैसे करता है एंड एज अ कम्युनिकेशन और मिनिमल ट्रस्ट या नो ट्रस्ट प्रोटोकॉल्स जो हैं ये सारे काम कैसे कर रहे हैं, ये सारा जरूर समझ लो एटलीस्ट फ्रॉम अ टेक पॉइंट ऑफ व्यू, 30,000 फीट व्यू, and then at least start looking into the main projects कि यार इथेरियम जो है इतना मैसिव क्यों है, ऐसा क्या है उसमें जो बिटकॉइन में नहीं है, why is bitcoin said to be the future gold या the better gold or whatever। and फिर तो यार इतने सारे हैं कि कोई अंत ही नहीं है। एंड ये भी है कि बहुत सारे शिट हैं, there is no doubt कि lot of this is trash, क्योंकि जब भी कुछ ऐसा आएगा स्कैम भी होंगे। एंड बहुत बार होगा कि स्कैम नहीं है, वो एक बहुत ही जेन्युइन प्रोजेक्ट था बट इट फक्ड अप, right? If long-term capital management can blow up with the smartest minds on the planet कि भाई सारे Nobel laureates हैं, सब कुछ है, and they can go to zero, why can't a legit crypto project? वो भी होगा, but that is where your आपका जो भी risk management है या आपका जो tolerance for fuck-ups है, that is where it comes into play। अगर आप super safe player हो जो थोड़ा सा भी प्रॉफिट आते ही बुक कर लेता है या फिर बहुत टाइटली अपना प्रॉफिट ट्रेल करता है, then maybe you should observe this from a distance। if you're the kind of guy जो मतलब risky player है, not booking profits, you can go deeper into this and even park your money in some of these projects that you understand and are there for the long term।
So earlier we discussed, trading and investing. So, Vihan is actually touching on both the points. Investing is where you do this research and hold these projects and coins for a while and see the development, if they are able to continue. So, that's what we've done. And then trading is like volatility driven, right? Where you book profits or not book profits. Trading is agnostic of the underlying merit of the coin. Maybe if you're trading such inefficiencies, you want to probably trade in more liquid coins and jinki market capitalization on volume is high. So that's really the thought. And Vivek, I thought I heard you were you saying something?
Hey, I didn't say anything. Hi Vihan, how are you?
Good sir, good. How are you?
All good.
Okay, so I think we are just probably we can wrap up. I have one more question here, which somebody sent, Prashant. Penny crypto and risk involved with it. So penny crypto is, just like, I think we've talked about this a little. Penny crypto is just like penny stocks, and then those, if the when the project is new, nobody knows about it. That's where the risk is most, because people are still trying to figure out. When Ethereum was launched, 10 cents one ether, was very soon it was trading at that. Now it is like 2000 $2500. So it will happen with every, and then there's so many coins which will never take up. So if you're looking to trade these new altcoins, I would say that you should invest time in understanding what they are doing, rather than just picking it up on the basis of somebody. So there's a lot of concept of shilling a coin. Shilling a coin means, let's say we three or four of us which were on the panel today, we build a coin and we go and start talking about it, ki ye to, this is going to be the next rocket, and people start buying it, and then we get exit out. So that's called shilling. So it's a lot rampant in the crypto space. That's why when it comes to buying these coins, either keep your exposure very, very low, or read up on it. Like right now, there's a lot of talk about Matic, and I don't think Matic is even in the top 10. Or there's another such application called Solano, something of that sort, which is also very promising. So you have to invest some time if you're looking to invest in this. If you're looking to trade, I would say, if you're looking algorithmically to trade on top 10, top 20 market cap and liquid coins. That ways, you can get in and out, and you don't have to worry about, it will not crash in a single day, as long as your system is there to prevent you and make an exit. Uh, but investing, and practically speaking, there are 2000, 3000, I don't know how many altcoins are there. To do a research on all of the altcoins is not an easy task. So follow people on Twitter or Medium or any other such networks, and see what people are saying, and then put your own research and thoughts beyond it, behind it, if you are looking to invest in the space. So that will be the thought on penny crypto, and of course the risks involved in it, similar to any penny stock. Okay, I think I do not have anything else to share. If anybody else wants to share,
can we talk about Bitcoin sort of cycle? Where do you think we are?
Oh, yeah. I think so from a price perspective, I think we are only. I mean, it's very hard for me to give up a number on the Bitcoin. And I think Vivek, you and I, we just had this discussion one time wherein there's a flow indicator on Bitcoin. It's indicating on the basis of the supply in the market where the Bitcoin could be. So in terms of the value, if somebody asks me, I never try and predict. I have been, whatever little amount of Bitcoin I have, not even one full Bitcoin, I've been holding it. I've not sold it. I don't think this is going down. It's not going to go to zero one day, and that's at least my thought. But in terms of the space itself, it's been evolving. So I went to my program at Berkeley. We went to financial engineering. And there was a small batch of 60-65 only of us, and out of those 60-65, 4 or 5 people in US are already working in crypto space, either as a market maker or as an investment manager. And that has only 5 years ago there was 0, and now there are 5. And I'm hoping in next 10 years there'll be 10 of us or 12 of us who will be in that space. So this space as a whole is growing, and Bitcoin, as long as the space keeps growing, Bitcoin will keep growing. It's like the father or the mother of the entire space, which came first, and it enabled everything else which is associated with crypto space. So in my opinion, this is, we are just maybe not even 30 or 40% in terms of growing the overall. And I'm talking about the exponential growth. So my expectation is that the 200 multiple or 1000 multiple or 100 multiple on price is not going to happen. I think going forward, the peaks are going to be lesser multiple, and so will be the drawdown. So if you think about it, something started as a very volatile instrument, it's going to go in, and the volatility is going to come down as more and more people start accepting it and start being comfortable with the volatility that is coming around. It itself will reduce the volatility. The volatility goes up because people are not sure what's going to happen. So the crashes are big, and so are the run-ups. But when people start, the adoption increases, the volatility decreases. And if you look at the Bitcoin volatility patterns over last 10 years, this has been the trend. And I think this will continue. The adoption will increase and the volatility will decrease. So, your next run up may not come at 20x or 10x or 3x. It may only go to 2x. But think about the perspective that, right now it is at $40,000. Next 2-3x is still $120,000. So in absolute sense, it's still growing up a lot. So, that's really what my thought is. And, the crashes will not be probably 80-90% anymore. It will be 50-60%. And maybe going farther, it will further slow down, the crash. I think it will settle in as in its own asset class with its own features of volatility. Like your bonds have much lower volatility and much lower return versus equity. So, Bitcoin will likely be on the other side, having more return and more volatility from an asset class perspective.
That's actually really good from adoption point of view, because if it doesn't have those 80% sort of crashes going forward, then and it stays sort of constantly in discussion without going through these crazy cycles both up and down. That's very good for adoption long term.
Yeah, I'd say so. So somebody's asking, new to crypto, any recommendation where to start? I mean, where to start? Just go to Bitcoin Network, read up on opinions of people on Twitter. There are so many people. I mean, if you look at, let me go on our the first page we had, wherein our Twitter handles are there. I think all of us will follow. At least I follow some crypto people. I'm sure Vivek does. I know Vihan does as well, and maybe.
BlackRose_tech doesn't follow too many crypto people, but if you go to my personal wala handle, Desi Tony Stark wala, that is full of a lot of good crypto people and a lot of crypto garbage also. So usme you'll have to filter on your own, because I like to be cognizant of garbage kya keh raha hai, kyunki garbage here is able to move the markets often. So I follow everyone. And what is impressive is ki some of the people have given this thing so much thought. Matlab, the good guys who understand like the technology, particularly like blockchain at a very fundamental level, and how many things it can disrupt. तो मैं तो आपको लोगों को suggest करूंगा, if you know, to hell with Bitcoin and all the cryptocurrencies and crypto assets, at least understand the blockchain technology, because whether crypto as an asset class or Bitcoin as a cryptocurrency goes anywhere or doesn't, blockchain as a technology is going to be further adopted across different domains. Well, starting with probably trivial cases and eventually very disruptive cases, to the point that the way we view different organizations and entities, even governments, might change, and even nation states. Again, हो सकता है अगले 2 साल में हो, 20 साल में हो, 50 साल में हो, but होने के बहुत अच्छे chances हैं. So something to look at.
So Vihan, what is ironic is when you said to hell with Bitcoin and go with blockchain. So when Bitcoin arrived, blockchain, Bitcoin ka sabse bada use case was this blockchain. And now people are saying that Bitcoin may or may not survive, blockchain may survive. So, I think it's kind of interlinked. Yes, Bitcoin is one use case of blockchain, and blockchain can have thousands of use cases. But the fact that this started from it, I think, Bitcoin will probably remain relevant in that space forever as found. And like Vihan said, the blockchain technology, if you read up on it, it's fascinating. If you think about what can it enable, if it's able to enable that, just like somebody commented earlier on the chat as well, that Bitcoin today is what internet used to be 20 years ago. And I wouldn't challenge that, because 20 years ago, when somebody told me what's an email, I couldn't even get my head around it. And now we are using like this Zoom, communicating across the globe in the same time, right? It's the same thing with Bitcoin and blockchain. Right now, blockchain might seem, oh, this is too good to be true, or this is, this will have thousands of problems. Yes, but that's the evolution. That's the technology evolution, which might happen in front of us. So, read up. Like I always support that thought. Read up on the technology. The tech aspect of coins will take you much farther than any other aspect in the space.
Hey Ankit, I have something to say. So can we discuss what was discussed on the last meetup?
There was no meetup. I think we just had
discussion. I mean,
we just had a we discussed random ideas. We were just thinking, can there be an exchange which will completely tokenize all the current assets like lumber? So FTX is an exchange which is now tokenizing Tesla and lumber futures. So will it be the go-to exchange, or the challenges that might come into that exchange? We also talked about this gold example that I talked about. Why does gold has a perception value, and why should Bitcoin have a value? We talked about crashes. I've already covered that, and the tweet mentioned of crashes and revamp up was talked about. So apart is chat, can you mute yourself? There's a lot of background noise coming from your side. Sorry. So we also talked about these altcoins called what's that, C2, C20. So there's an ETF kind of an index kind of a ETF coin that a company started 5 years ago. So which basically market cap weighs some coins and hold it as a portfolio. So just like your index. So when you, rather than doing it yourself, trying to figure out the market weights, use CR20. I'm not able to recall its name, but they are holding 20 coins for you in index fashion. So that's like a passive investment vehicle, which itself is a coin. That is there. And what else? I think these were just broad discussions around the concept. Okay, any last questions? I think we'll call it a day otherwise. Any last thought?
I don't know if this has been addressed already, but if you're entering the space and particularly following people on Twitter that are into the crypto space, the first thing you should do is learn the terminology. Matlab, ye jo chat, simp, rect, not gonna make it, all of this stuff. Just learn this, otherwise you'll be lost. Ki bhai ye bol kya rahe hain, to badi advanced cheeze bol rahe hain. But it's all like basic. Shilling is just like, pump dump ka, fancy way. So just learn the terminology, because otherwise you'll be tech wali terminology, yes, and also the urban slang जो use हो रहा है, तो it'll take you further. मैंने बैठ के कुछ टाइम सिर्फ पढ़ा कि भाई ये सारे शब्दों का मतलब क्या है.
FUD, the most common. Anyways, yeah. Vivek, any thoughts from you before we close?
No, except that I think Bitcoin seems to be not following the past sort of patterns like it did last cycle, so 2007. That expected sort of bubble post halving doesn't seem to be happening this time. So we're definitely in a sideways market now, not in a bull market at the moment. So I feel like the structure has changed. So I think a lot more people will get opportunity to buy at good prices, because I feel like this is sort of, at least per my models, like this is somewhere in the middle. It's not in bubble territory. It's not in like throwaway sale territory either. So it's somewhere in the middle. And it's not such a bad thing if it stays in this sort of zone, because I feel like, people buying in bubble territory is what causes a lot of pain. And then, that pain people remember and don't come back to the asset. So I think someone buying here, the chances of not making money over the next couple of years would be very low. So yeah, it seems like it's not such a bad thing after all, that those crazy 200, 300,000 targets in this cycle didn't fructify, and I don't think they will.
Yeah.
I think structure is completely broken. We are not in a bull market anymore.
Yeah, things have changed, and like I said, it's I think, and this will continue. The settling in of the large moves and large drawdowns are gonna, in my opinion, are gonna squeeze lesser larger moves and lesser drawdowns. So we'll see. This is just our okay. I think with that, I think I'd like to close this. If anybody has any questions, like we said, these are our Twitter handles. For any follow-up other questions, please feel free to speak to us. Otherwise, I hope you found some value in this, and have a good upcoming weekend for all of you. Thank you.